JP Morgan did come out with another note today. They said that their 2026 S&P forecast, they said they're expecting 11% upside at 7,500. So they say it's going to be driven by double-digit earnings growth. No surprise. We know earnings, it's forecasted they're going to grow double digits next year. But they say they expect just 2 cuts next year, which I thought was a little crazy to have such an optimistic outlook with just 2 cuts. I see at least 4 rate cuts. I see at least 1%. That'll add up to 1% in cuts in 2026, unless a new Fed chair wants to get fired by Trump. That's going to happen, and Trump will go after him. And I know there's a voting process. I get it. But, again, with Trump pushing this, trying to get someone fired 5 months before they retire, that's how bad he wants interest rates lower going into the midterm elections, especially. But they also said, JP Morgan, if the Fed cuts more than 2 times, we could see 8K on the S&P 500, 18% upside. Now, with that said, Daniel, JP Morgan on July 1st this year predicted the S&P would close at $6,000, and it's 6,800. While Goldman, they raised that target to 6,600 around the same time, mid-year, which is a pretty good forecast. I mean, what do you say in terms of next year in these forecasts? Should we believe them? Because I'm going to put up a chart of all these forecasts. And I love accountability to see what they were saying in 2025 compared to what they're saying now.
Yeah, forecasts are tough. I mean, let's see. Let me check this crystal ball here, Frank.
There you go. What are we doing?
It's hard to think that the markets would close lower. I mean, at some point, we've had such great returns. It's like seeing red on the roulette wheel. Red, you got to bet black eventually. It would surprise me if there's only 2 cuts. So they mean, do they expect a cut, in December, and then 2 next year?
They're saying
how
2
they're
next
saying
year. They didn't say, there's only 1 that would be cut this year, but they're saying two next year are going to be cut. And that's 75, but they said if they cut further, then it can go up to 8,000.
Okay. I definitely think there's going to be more cuts. I don't know about 4 next year, but there's got to be several, because the easy looking at this is we've talked about truflation a lot, not putting this on Frank. I've talked about this more. I think this is much more accurate than what the Fed has. They are significantly looking back at this data. This truflation is more up to date and such. And to my point, in early November, Frank, on November 3rd, this had true inflation, had inflation at 2.7%. Right now, today, it's updated daily. You can go to the website for free. It's 2.37. The reason I point that out is Fed Chair Powell currently himself has always said, hey, we're not going to wait until this 2% goal to lower rates. And they've started lowering rates. Now they're in this pause or this kind of coin toss situation. However, if inflation is at 2.37, which is what truflation is, I'm going to side with this over the Fed statements or info, then that means we are a lot closer to this silly Willy Wonka 2% goal anyway. And I think that will spur more Fed cuts just because of the data. To your point, when President Trump gets his guy in, they are going to be extremely dovish. I think that's part of the reason why markets have begun to kind of rally a little bit here. The number, I'll take over 10%, but man, it's just hard to think that we're going to close next year lower when you have the implementation of the tax cuts, the big beautiful bill, the elections and all that kind of stuff. They are going to do everything, they being politicians, both sides do it, are going to do everything to goose asset prices because that has a wealth effect. People feel better when you see green on your account versus red.
So here's some of the forecasts where 2024 closed at 58.81 on the S&P 500. And I don't know who BCA Research is. They had a 44.50 target this year. We're at 6,800 now. Stifle, 5,500, very wrong. And everybody else has a bullish forecast. UBS, JP Morgan, Citi, Morgan Stanley, Goldman Sachs, Barclays, Evercore, Bank of America, RBC, Yardeni Research, Wells Fargo, Deutsche Bank. And if you look at Goldman Sachs had 6,500. Again, they raised that. But Barclays, 66, Evercore, 66, good forecast. We're at 68. Bank of America, 66, 6666 was Bank of America's forecast. Are you kidding me? Holy cow. I don't know. I know 3 6s are the devil, but 4 6s, it's got to be worse. BMO Capital Markets, 6,700. HSSB was 67. RBC Markets, 6,700. Good for them. You have Deutsche Bank at 7,000. A little bit below that. Yardeni reaches 7,000. But now we're going to see the forecast coming out over the next month. I just want to say, listen, kudos to RBC, BMO, Bank of America, Evercore, Barclays. They got this right. JP Morgan was light. UBS was light on their forecast. Citi was light. Morgan Stanley was light. Goldman Sachs was light. A little bit light, Goldman Sachs and Morgan Stanley. But I like looking at forecasts just to see where everyone is on these forecasts. But I'm going to tell you, they always say the past is no indication of the future when it comes to stocks and, making gains. Do you know the last few years? So 1, 2, 3, 4, 5, 6, 7 years. 7 years of the returns of the S&P 500. I'm going to tell everyone what the past 7 years of returns for the S&P 500 were. What do you think? You think all of them were up, a couple were down? This is from 2019 to 2025.
2022 was down, I think, but the last couple of years, you're giving the average? Because the last couple of years we've had 20 in a row, so it's got to be high.
This is from 2019 to 2020. 2025, so this year we're up 16%. Last year we're up 25%. The year before we're up 26%. right? Then we had 2022 minus 18%.
18, okay, I wouldn't remember
The year
that.
before that, we were up 29%. That's 2021. In 2020, that was COVID. A lot of people don't know this. They did the market crash, but we ended up 18%. The markets hit all-time highs. That's why I was so pissed off where all the massive spending, we had every asset class at all-time highs. I mean, even you look at cars, you look at stock markets, you look at houses, you look at almost every single, collectibles. Everything was at all-time highs at the end of 2020. What did our government do? They spent another $5 trillion and threw it into the economy, and they wondered why in 2022. Oh, inflation is going to be transitory. What are you thinking? You didn't give it to the banks. You handed it directly to people in PPP loans and said, hey, here's more deductions. Here you go. Here's all this money, free cash. Your neighbors who work city jobs have 3 Mercedes, and just got their house redone. I mean, you wonder why, 2022 inflation went through the freaking roof is, that's how much when you inject all that money into the market. So then in 2019, up 31%. So to recap, since 2019, S&P 500, if you own stocks, think about this, up 31%. Then you're up 18%. Then you're up 29%. You take a step back, down 18%. Then the next 3 years, 2023, up 26%. 2024, up 25%. And now you're up 16%. And they're forecasting most of these people for a 10% plus gain next year. This is why you need to be invested in stocks. Why? Yes, there's bubbles. But what happens when these bubbles, what happens in the worst case scenario? What's the worst case scenario during a credit crisis? Holy shit, the whole system's going to end. What did the government do? Let me inject a shitload of money into it, right? So you had the Fed put. What happened during COVID? Well, not only did they inject money, okay, because and COVID was a black swan event. They closed everything. Now we know the facts. It didn't have to close, and it wasn't as bad as they said it was. Okay, that's what happens during election years. But what did the government do? Not that they injected money in 2020, 2021, 2022. Massive amount of money comes into the market. Even when we saw a couple of bank failures, right, recently, like in the past couple of years, the government comes in, backstops it. If you're worried about this 25% correction that everyone talks about, just realize we're going into an election year for midterms, which is very important because one party owns the whole entire government. That's why you want interest rates incredibly lower. There's a reason why David Tepper is buying the shit out of housing stocks right now. Okay, you should follow me. Bought China stocks about 18 months ago, and look where they are. Just great indicator of the markets and a macro perspective of how to position himself. Now he's buying housing stocks because if interest rates come down and mortgage rates come down, you're going to see the housing market take off because there's so much demand. They just don't want to buy the houses at this interest rate. They want it lower. So if you have lower interest rates combined with deregulation, which means more banks are going to have more money, injecting capital, lending more money to companies, is a reason why you're seeing this whole rebound is being led by what? Not by technology, not by Dow stocks. You can say a little bit of healthcare. It's being led by small caps. Small caps are over 2% today, with the rest of the market up 0.5%. Yesterday, they outperformed the market 3-1. You've seen the past week or two with these stocks, with small caps going through the roof. It's kind of amazing. So I'm seeing these gains, unbelievable, in the S&P 500. You just have to put in perspective. This is why you need to own stocks, even though they could pull back. If you have a black swan event, just know the government is going to do everything it can to spend as much money to stop it and prevent it because it's election year and they almost always made money when they bail out somebody, especially during the credit crisis. They made an absolute fortune. So they don't see it as a risk, especially with this administration. You can like Trump or hate Trump, but he's going to do everything he can. His stock market is the gauge of the economy. So if we're pulling back, if you think we're going to pull back next year, he's going to make sure interest rates are coming down tremendously. He's going to make sure he signs more deals with governments. I don't care if you like it or not. I don't care if you believe it or not. You can hold up signs or whatever. I'm telling you how to make money in this market. You have to be in this market, okay? You just have to be in this market. And yes, you have sector analysis and different sectors, and biotech and healthcare on fire right now. AI pulled back a little bit. It's a good buying opportunity. A lot of people think JP Morgan predicted, oil prices in the 30s in a couple of years from now. So, I like oil here. I think these companies are in great shape considering the market it's in. Plus, every international market's booming. Their stock market is booming. I think it's going to be great in terms of building for oil prices and copper prices, but there's just different areas you want to invest in, but overall, having your money in the markets and don't try to time the market. Because if you try to time it every single time, you would have got nailed. You would have saved 18% in 2022 if your timing was perfect. Look at the gains that you would have missed. 31% 2019, 18% 2020, 2021 up 29%, 2023 up 26%, 2024 up 25%, and 16% this year. And now we're going to get double-digit earnings growth with lower interest rates going into a midterm election of a new administration that believes 100% that the economy is based on the stock market. There's a lot of fuel there along with deregulation that it's going to mean, hey, if we do pull back, there's going to be a huge buy the dip mentality similar to what we're seeing in Bitcoin with institutions right now. That's why I'm optimistic heading into next year.
That's right. Own stocks. Got to.
Own stocks. That's what Daniel's crystal ball says. And it's so funny because he says it so much that I think you're going to say it. You're like, wait, crystal ball.
Yeah.
So, I kind of feel bad you got that now because I like when you say, well, if I have my crystal ball, but now every time you say it, you got to hold up your crystal ball.
I know. Now I got one.
Now you got one. I love it. I got to put it on a little pedestal right behind you. That's what I got to do.